Hey guys, Jason. And here recently I've been getting a lot of emails and a lot of messages asking me about this whole idea of Fidelity letting you invest part of your IRA into Bitcoin and what that means for the whole Bitcoin ecosystem. So first of all, I'm going to break down the details of this, and then I'm going to go into my opinion of how this will affect trading of Bitcoin and the future outlook on price. So first, the minimums. A lot of people think that that means that anyone that has a Fidelity IRA can just invest into Bitcoin instantly, and that's not so. First of all, which is going to be the big kicker, which is going to eliminate a lot of people, at least of the younger generation, is they put a minimum of $25,000 minimum that you have to take from your IRA and invest in Bitcoin. Now they'll do that for you, but I'm sure they'll charge you, investing fees and transfer fees. So it's going to be, a higher fee rate. And also $25,000 in an IRA, that's a large amount. Now, I know people of the older generation in the 40s, 50s, 60s and above, $25,000 in an IRA is still a large proportion, but it's not like the younger generations where it could be almost all of their IRA amount. So that's, like I said, going to eliminate a large portion of the investees of maybe the younger or poorer generations, or younger generations but poor socioeconomic classes. So the next is, and this is where it gets interesting, they make you be an accredited investor. Now, I was really interested, so I looked into what is an accredited investor with Fidelity. And an accredited investor is really, really interesting. You have to have either $200,000 annual salary USD, which instantly puts you in, I think it's like the top 15, 20 percentile of America, if not like the top 10 percentile. So that's instantly going to push off even more people. So, $200,000 annual salary, especially where I'm from, isn't a huge, mind-boggling amount. That's a lot of money. Now I know in some of these, huge cities, 200,000, 100,000 is minimum even just to survive sometimes. But 200,000, especially to my average viewers, that's a lot of money. And the average person with IRA is not making 200,000 a year. Or, this is an and/or situation. You have to have $1 million in assets, excluding the home equity. So even if you have like a $500,000 house, doesn't count. It only counts on the assets. So I'm assuming that they mean by assets like stocks, bonds, investments, properties, cars, any of that, which, most people, their house is their largest asset, and then it's their IRA or their retirement fund. And then it's, a car or something of the other sort. Most people don't have, a vacation, which even if it was, I don't know if it would be a vacation home, if, a second home would count as home equity or not. But it's really, really excluding a large population of the people that probably use Fidelity. But I can also understand, like anything, you start small and you expand. So maybe, the first year they add this and, 100 or 100,000 people, not 100,000, 100 or 1,000 people maybe, venture into this option. And then maybe they kind of expand that and they lower it down to maybe $10,000 and maybe, you have to have a $100,000 annual salary or something of that sort. So I'm not too concerned. Worst case scenario, it flops for them and they realize, Bitcoin investing isn't ideal. But I think it's going to be the complete opposite. I think they're most likely, unless they're kind of steady in their pace, they're going to lower, the qualification levels to get into this over the years or over the months as it, they develop a ability to invest and kind of macro manage all these accounts, which is always an issue, especially in finance, macro managing, potentially hundreds of thousands or tens of thousands of accounts that, you have tons of investors wanting to have information, at the key every morning, wanting to have this, how's my IRA doing? Although the average, average American, they don't check the IRA every day, but to some, it's kind of like a secondary investment account. So, it varies. So a lot of people are asking me, do you think this is going to, blow the market up? Is Bitcoin going to do really well because of this? Well, the news story has been out for 3 days, and we haven't really seen too much of an increase in a price. So first of all, there's no, news story instant, surge. So I'm not really seeing, a huge increase in price. And I didn't really expect so because, like I said, you have such a small amount of investors. Even if they have, Fidelity has a huge IRA platform, this is going to knock off a lot of people. Like I said, maybe maximum. I'm saying, 100 to 1,000 investors, but probably max 10,000 because who's going to invest 25,000 into one individual fund? You're talking about people that might have, a IRA account of 500,000 plus to even venture into that type of risk, especially a risk as big as Bitcoin or any cryptocurrency. So it's an issue to be risen, but honestly, I don't think this is going to affect the price very much. Although I do think it's an interesting story. There's a lot of stories about not stories, but ideas about the idea of if Bitcoin was added to a forex exchange or like or international currency exchange, and how that would affect the price. Some people argue that Bitcoin would take up 10 to 15% of that. That seems kind of high to me, especially with the amount of money. I think London trades $1 trillion in currencies a day alone, their own city. It's mind-boggling. It's crazy. But I think, to get back to the Fidelity thing, I think this is, a great thing. It's getting more people with the idea, and maybe, the next year, maybe in 2014, we'll see, hedge fund operators and investors starting to take, a minute risk in these cryptocurrencies, most likely Bitcoin. And I think, it's a great stepping stone to get the rest of the investing market to kind of, not overlook Bitcoin and any of the crypto coins and kind of look at its true potential and its true market value. So anyway, guys, I hope you enjoyed this video. Have a great day.